Good day. It is Saturday, March 9, 2019. Today we're going to do something highly unusual. First, we want to thank you for joining us here on YouTube. We will be today laying out the development of a specific trade, and not just any trade, but what we believe will be the best, most profitable trade we can make in the month of March 2019. So this is an exciting situation that is coming up. This video is a little bit complex. You may want to watch it more than one time, maybe several times, to put all the elements together and understand how we develop a trade. But jumping right into it, we are taking a look here at the 25-year picture of the New York Stock Exchange Composite, going back from 1994 through 2019, and this is on a monthly basis. By definition, or at least our definition, we are in a bull market when the monthly MACD has given a buy signal and remains in uptrend, when the 13-month moving average of the New York Stock Exchange Composite is moving upward, and when the CCI monthly has given a buy signal and remains there. We go into a bear market when opposite conditions exist. The MACD monthly goes to a sell. The 13-month moving average of the NYSE Composite is falling, and the CCI gives a sell signal. To make a long story short, we are now in a primary bear market, which began from February 2018, at which point the markets turned down. The MACD confirmed that with a sell signal in 2018. The 13-month moving average of New York Composite is moving down. The CCI monthly also produced that sell in 2018. This is a primary bear market as per the definition that has served us very, very well over our career. Here is a slight blow up of that chart, just the last 12 months, and you can see those trends very clearly here, including the one we're currently in. This is at the beginning onset of a primary bear market, meeting all of the definitions. And here is just a 1 year. So you can really see the peak in January of 2018. Notice that I think everybody knows that the S&P 500 and the Dow Jones Industrials made new highs in September, October of 2018, and that was the peak of the cycle. However, New York Stock Exchange Composite, interestingly, failed to confirm it, and that was one more indication that the broader averages already had topped out and we have entered a primary bear market. Moving on down, taking a look at the 3 years via weekly charts, you can see here is the end of the primary bull market that began clear back in 2019, blew off into January of 2018, and that was the top in January of 2018. Here's that secondary top, September, October of 2018, where the New York Composite was lower. And here was the first leg of the bear market that took us into Christmas Eve 2018, and then the subsequent bear market rally that we have all experienced since Christmas Eve into the end of February, beginning of March 2019. Taking a look at that on a weekly 1 year chart, you see that whole 2018-2019. Here is the bear market rally from Christmas Eve into last week, going on down. Looking at it on a daily 1 year chart, again, you can see this is 2018. This is the bear market rally. And then you can see, boom, right here, we turned down, we broke our 13-day moving average up, telling you something's up here, something important. And in fact, that something was the beginning of the second leg of the decline, and we've got it marked on here, but we haven't told you yet how we determined that. We did determine that by using our proprietary line of least resistance, which is the 2-hour 7 sentinels. When all 7 sentinels charted on a 2-hour basis go together to either uptrend that marks the beginning of a line of least resistance advance, one that lasts typically several weeks, sometimes months. When they all go to a sell together at the same time, as they did last Tuesday morning at 10 a.m. New York time, that marks the beginning of a downtrend, and in fact that has marked the beginning of the second leg of this bear market. That's where we had it marked on the daily chart. Here's where we've got it marked on the 2-hour chart. That was a very, very important event that occurred Tuesday morning, 10 a.m. New York time. Finally, we're going to look, though, for refining a trade to our 10-minute 7 sentinels, which we call our short-term sentinels, or STS for short. And we're looking at the 10-minute sentinels for the last 6 days for the Standard & Poor's 500. Here's the Tuesday morning sell signal that started the second leg of this bear market. The markets had a sharp drop this week. We got short in here, 80% short via inverse triple leveraged ETFs. And then as we came down here on Thursday midday, our short-term sentinels actually produced a buy signal. So what we did then was, as markets continued coming down Thursday and into Friday, we knew that we were in a short-term buy signal. We began reducing our short holding, and we reduced it all the way down from 80% to 30% short by the end of the week, where we are right now. What's going to happen next? Well, we're in a short-term sentinels buy signal uptrend within an overall short-term, intermediate-term, and long-term decline. So now we look for our next entry on the short side. That's the subject of today's video, and we expect that to occur late Monday or perhaps Tuesday, but at any rate, we'll know when it happens because the 7 sentinels for the 10-minute short-term sentinels will produce a sell signal. When that happens, we're going to load up and go to near 100% short, because we look for the next decline that will start after that signal to be not just 90 points like we saw this week, but perhaps as much as 150, 200 points on the Standard & Poor's 500 over the next couple of weeks following that. It's going to be one heck of a trade. We've got it all mapped out. We showed you, we are showing you today how we developed it. You may want to watch this a couple of times, but that is how we will know. For those who watch us on Twitter can watch us as we post the signals as they develop. Better yet, if you are a subscriber or try a trial subscription, we'll be describing everything in detail as it develops. In fact, if you go to 7sentinels.com, look at the bottom of the page. There's a whole bunch of articles here that explain how we got here today into the beginning of this bear market, actually into now the beginning of the second leg of this bear market. In some detail about what happened over 2017 and 2018 that told us that the primary bear market was about to begin, and then when it did begin. If you click on limited time trial, you can have 17 days of 7sentinels.com for just $9.95. This would be a good time to do it if you want to follow along as we develop this trade over the next 2 or 3 days, because we'll be explaining in detail how that trade is developing, and you can read it live as we do so. So we'd love to have you join us for that, but in any case, we do thank you for joining us today and watching this video, and we wish you great trading in the week ahead.